Good morning, good morning. Hey, hey, hey. If you want to chat with me while we're on the live stream and say, hey, good morning, like everybody else, all you got to do is click the button right down here and be a subscriber. A few seconds later, you can chat on the live stream while I am live. If I'm no longer live, you have to leave a comment down below. Kind of locks the live stream chat. So that's kind of the point of a live stream chat, right? Anyway, welcome everybody. And so how about this consumer, huh? Well, gotta see, I'm a little concerned here, a little bit concerned. We have Goldman Sachs putting out this report. All right. Now, U.S. consumer is proving stretched more than previously anticipated as inflation combined with a bit of softening in the macro. We're seeing lower payrolls and an uptick in unemployment in April. Elevated gas prices kind of ramp it up. High interest rates continue to eat into the spending power and consumer confidence. Now, what we're seeing is a big miss in the University of Michigan sentiment right here. Big miss. We're actually seeing the biggest miss on record right there. Look at that. Consumer sentiment taking a bath. So, is that consumer starting to crack? And this is kind of like the house of cards, right? I've been talking about this. Like, we can keep going for a while, but once the consumer cracks, how are they going to keep it going? We've been borrowing money like crazy to keep the GDP rising. Without that government spending, GDP's actually been shrinking. Have we just been in a big recession with paint pasted over it with the government spending and borrowing? Quite possibly. And we possibly started this thing back all the way in 2022 when I put out a video about it back in June. And we've just kind of been coasting along here, running at airspeed. And this thing may crack here. I'm very, very cautious and nervous. We're going to see, and we did see last Thursday, we saw unemployment ticking up. We're going to see PPI coming out tomorrow. We're going to see CPI coming out on Wednesday before the market opens. So all this stuff coming down the pipe this week. And we got that CPI on Wednesday. We got the PPI on Tuesday. We got Fed Chair Powell speaking right there. He doesn't usually get out and speak much unless he has something to try to adjust or massage the narrative a little bit. Got those unemployment claims on Thursday, as we always get, and then that'll kind of wrap up this week. So we do have more earnings all week again, but like I think 95% of the S&P is already reported. We're down to, I think there's only 7 S&P 500 companies reporting earnings this week. So that's kind of wrapping up the earnings, the major earnings. There's going to be earnings trickling all the way through the rest of this month in June, and then we'll get the new quarter, the next earnings season for Q2, earnings in July. So we're already ramped up through the major set of earnings. Now, all trading involves a substantial risk of loss. All right. Before we talk about actually how we make money out of all this stuff, past performance, not necessarily indicative of future results, just because I kind of put the narrative to it and predicted it and, got it right before, get lucky. I may stop getting lucky. I may never get it right again. All right. This presentation intended to be informational, educational, fun, and entertaining. It is not a recommendation to be buying or selling anything. All right. Don't buy stuff from gurus like me. Don't buy stocks. Don't buy options. Don't buy bonds. Don't buy futures. Don't buy Forex. Don't buy future. Don't buy cryptos. Don't buy treasuries. Don't long them. Don't short them. Don't trade them. All right. There's a substantial risk of loss. Make sure you know what you're doing. Give yourself an edge. All right. Don't just be like, well, I saw this on TV. JT talked about it. All right. Make sure you have an idea, a plan. All right. It's not being wrong that costs you all that money. Right. It's not being wrong. You can be wrong and not lose a ton of money. You probably lose some money, but you're not going to lose a ton of money. It's staying wrong, right? Don't stay wrong in the face of new information, in the face of being convinced you're wrong, right? Like if you're like, oh man, this is a bottom here, and we go buy, and then boom, it goes lower. You're wrong. All right, get out. Don't double down. Don't do any of that stuff. If you desire personal financial advice, hire and consult a financial advisor. It's not what I do. All right. I'm not trying to tell you how to manage your money. I don't know your personal financial situation, and I cannot give you advice based on it. All right. Because I don't know. It's just not the business I'm in. I'm not certified for it. No, it's not what I'm interested in. I'm just here giving blanket general advice. Like, don't stay wrong. Right. I mean, that's like a common sense thing. Like, you're going to lose money if you stay wrong in the markets. Now, ES, this is S&P 500. Opened up last night at 6 p.m. And, well, not too shabby so far. Opening up, I'm going to open up right up here near the high that we had on Friday. Not too shabby. But what did we do on Friday? We dropped. And then we started rallying back up. So, what does this mean? Well, not too sure so far. We opened pretty flat. You see right here, we opened on Sunday, right there. Opened up 6 p.m. on Sunday. Kind of opened flat. Didn't really do much. No gap. Why do I use the futures? Because, well, it presents information. Like, if you're just looking at the S&P, we haven't even opened yet. Like, you're like, well, how do they know we're going to open higher? Like, you see all the headlines and things coming across, like CNBC and all the different places where people are like talking about it, and even JT. How do you know? Well, there's no smaller time frame on the cash index that tells you what's going on. So that's why I pop over the futures. ES1 exclamation point on TradingView. If you're looking on like Thinkorswim or some other platform, maybe //ES. That's generally how you find futures contracts. But there you go. And ramp it up. Looks like we're going to pop early. You know, my data is delayed by 10 minutes here on the futures, but close enough for government work. And in Q, same sort of situation, rallying up, but not quite making higher highs yet. Are we going to push above? Are we going to get out of this resistance? Kind of had this rejection of it on Friday. Got me very, very cautious here. Very cautious. Now, if we can get a daily close above that 786, above that 50 to 55 level on the futures, which futures are slightly priced, slightly different than the cash index. All right. It's kind of like trading options. All right. There is a time component in the price of futures. If we can get this close above the 786, probably setting the stage to rally higher on the S&P. Same with NASDAQ right here. If we can get this close higher than that 786, we're probably setting the stage to get the rally higher up to this 19.2 area at the minimum. Russell, on the other hand, NQ is NASDAQ, like QQQ. All right. ES, SPY, SPX, SPY, all those sort of things. Russell here showing a little bit different story. Not even kind of getting, and this may be like sort of a head and shoulders kind of reversal setting up here. Although it looks like a head type situation where they're all the same size. So far, if we break down, crush this thing down to the daily roadmap line, that's your first indication we're about to roll hard. All right. This looks very corrective here. Whereas on ES, we're actually looking like we could break out and go higher. On NQ, kind of looking like we can break out and go higher. But Russell, this is starting to, this is actually significantly lower and looking like we might roll. And this could develop into a bigger correction in the market. Is this the market tipping its hand that something's wrong? Something's wrong? Very well, maybe. Very well, maybe. All right. Be careful. Like this is something to watch. This one's the one to watch out of the three of them. Now, can you still make money on the longs? Very selectively. Very selectively. We can make money on longs for the next, and this could last a few weeks. All right. This could last into June. This rally here. Definitely take us up into June. When it cracks, watch out. Just like there's a lot of signs that when this finally cracks, we're going to experience maybe a 10-year long correction. All right. It's not going to be like 22. I don't think like this will be short compared to what we're about to start in on. All right, we might do something more like what we did back down here. Let me zoom this out just a little bit to a weekly chart. Look right here from the .com. Look, this is what I'm talking about. This kind of correction. We might do this again. This might be what we're in for. Big down, rally back up, bigger down, rally back up. See how long that took, right? From the year 2000 till 2013, 13-year correction. You can say, well, it stopped right there. Okay, 9-year correction. I'm talking about a 10, possibly 15, maybe 20-year correction, right? A bigger picture, bigger time frame correction than this. So how long will it take to actually come back out of it after we top? That's the kind of situation I'm talking about right now that we may be about to start on. And we've had a lot more air in this market to correct out. We could be looking at an ultimate low down here in the 1500 price. Out here, this could last into the 2030s. So it looks like we're in the final throes of this thing. So please be careful. All right, please, please, please don't stay wrong into a giant correction that could last a long time. We maybe, which one of these little final squeaks is going to be the last squeak? I don't know. I'm watching it very closely. Russell, to me, it's kind of the tell that something's going on here. Because look, when we zoom this one out, look where the high is. ES at all-time highs. NQ at all-time highs. Russell made its all-time high back here in 2021. And we haven't even gotten close to getting higher than that. This is the small caps. This is the drivers of the economy. Most, by volume of people, most people work here. Most of the money is here. Or most of the profit, most of the big, these are the 100 biggest companies right here. But as far as where everybody works, it's right here. Most people, 80, I think probably 80-20 rule, right? 80% of people probably work for smaller companies. This is showing those smaller companies struggling. That's the narrative that the market's presenting us right now. So be freaking careful. All right. Be careful out there. Oil. This is an interesting story going on here. Seeing some definite, look at that Johnson & Johnson filled. Cha-ching. I wonder if that was positive or negative. Was it? Yeah. Hit the target on the upside. Beautiful. Beautiful. Oil. Check it out. 30-minute resistance. Got to break through that to go higher. If we look at the daily here. Daily. Nice, strong bounce off of. Look at that. We bounced up. Hit the daily resistance and right back down. Hold the higher low. If we can break up and get back into that channel. Strong rally higher. If we don't, we may need one more flush down into this zone right here. So down here, this is support, 76. And the resistance is right up here at this trend line. Got to break above that to get up to this 83 area. And then we get up above 83. Probably going to set us up for 90, possibly 95. Why do I say 95? Right up here, this 94, 95 area where we topped once, twice, 3 times right here. If we can clear that, probably rally up to the 105. That's the 618 of this whole big correction where we topped back here in March of 22. 2 years ago, topped out right up there. We've been on this big correction, and we may go test the 618 of that. If we can break above that 105, we'll go on extensions. We're talking about 150, possibly 170, possibly 200 up here. Ridiculous kind of numbers on oil. You may be like, well, I don't think oil's ever going higher, blah, blah, blah. Well, just be careful, all right? It's not being wrong that costs you money, staying wrong. There's my 2 levels right now. Support right there, 76. Resistance right here, up here around 80. Break above that. Resistance at 90. And resistance 95. And then 105. When we start getting above 105, it's game on for those much, much higher levels on oil. GC. It's kind of like my big picture warning this morning. There's a lot of things looking kind of nervous. Now, could we have higher oil while we have lower prices in the market? Absolutely. Absolutely. Crazy stuff can happen. Gold failing to break above that 618 level on Friday, rejecting back down. We may come down, make a higher low. And if we don't hold a higher low, well, I mean, we may retest back in here. Yeah, that was kind of the breakout point. Retesting, so far holding support. If we break back below that little level right there where it's kind of like a flip point, what I would call it in the chart. If we break back below that, probably get a lower low, back on down around 2264 right there. Bitcoin showing a nice rally here. Usually I hit silver on the Tuesday 30 minutes of awesome. So I don't usually take requests during this show. Request show is 5 p.m. on Tuesdays. So make sure you're subscribed. Hit the bell with the notifications if you want to come make requests. So Bitcoin showing a little support here. We actually did this is what I was just talking about on gold. We did this move up right here. We did this 618 retrace, held the higher low, breaking back up higher. If we can get above this stuff here, it points us up. Next upside resistance up here at 68,000, where we've got the trend line coming down off the highs, like from this high back here in March, this high here in April, and we'll test the breakout here. If we can break out, it's highly likely we'll do this, where we come up, retest some of these other highs, get a retrace. Everybody will think we're like, oh, it failed. We'll probably hold, back test that right there, and then go higher from there. That's the typical pattern we would see. It can, of course, it can do anything it wants to do. It, doesn't have to do that. That's just the typical, what we'll probably see. And if we break down below this zone in here, probably go test the roadmap line right there. All right. That's the long and the short of Bitcoin right here today. Ethereum, on the other hand, still being lackluster, still kind of consolidating just above the roadmap line here. And if you want the roadmap line, links in the description. It's like $5. It's a very simple indicator. I have a video on it that I give you the code too. If you're more of a DIYer, want to put the code in yourself. But for $5, easy button. You just click the button and put it right on your chart. Pretty simple. And I give you training on how to use it. And there's a lot more stuff. But I do have the ability of DIYers to learn it all. Like there's videos that cover how it works, why it works, all that sort of stuff. Taught my wife how to use it. And so Ethereum's still looking bearish. There's a spot ETF approval pending out here on the 23rd. There's the possibility that the SEC, the Securities Exchange Commission, reclassifies Ethereum as a commodity, as a security instead of a commodity. Hey, I just got a fill on a couple of those positions. So making money while I'm talking. All right. And that could cause a knee-jerk reaction flush out here. This is somewhat bearish price action right now, but we are holding above this support zone right here. If we get below this support zone, watch out for the bigger flush. All right. We can go down to 1,600, possibly even down to below 1,000, a lower low than what we had back here in June of 22. Be careful, all right? Be careful. Don't stay wrong in the face of information. This thing's going to flush. If we get that reclassification, it's probably going to knee jerk. It's probably going to be violent. Will that be a buying opportunity? Possibly. All right. Can the spot ETF still be approved if they change the status of Ethereum? Not as they're written. They'll have to be modified and changed to support securities. But things like SPY, QQQ, those are ETFs of securities. So we can still have spot ETFs of securities. It just won't quite be the same. Dollar. Dun, dun, dun. Dollar. Right there, possibly dropping. Now, will Ethereum pull down Bitcoin? More than likely, it's going to be like a knee-jerk reaction, sell everything, buy it back. But when you look at it, Bitcoin is 53% of the entire crypto market right here. This is coin market cap. 53%, 54% roughly. And Ethereum is 15%. Where's the money? Most of it's in Bitcoin, all right, the majority. 15% in Ethereum, and that 15% is going to have weight, all right? It's going to, if they knee-jerk it, it's going to probably pull everything down a little bit. Could that be enough to cause Bitcoin to drop down to the daily roadmap line? Quite possibly. I mean, that may be what we get, and we get this flush down right like this and hold support here while Ethereum goes on a bigger flush out. Definitely be careful, all right? You have total market cap of crypto holding the roadmap line so far. You have total 2. Take out Bitcoin. Looks very much the same. So as goes Bitcoin, as goes the crypto market. And then we have total 3, where we take out Bitcoin and Ethereum. Still looks very much the same. So as goes Bitcoin and Ethereum, as goes the market, pretty much. Dollar here, looking like it wants to drop down, tap that, tap, that support zone right there. Then we'll see. If it breaks down below it, we're in for more downside. If it holds there, we'll probably shoot up and go visit the resistance up here at 108.50. Biggest movers for the day, MSTR, liking that little bit of Bitcoin move, but, fading quickly here. I still think this needs to come on down and clear this out. Get down to the roadmap line, back down here. Come on. There we go. Needs to get back down in here and just do a touch. Now, I've shown this off several times the last few days. If we compare Bitcoin to MSTR right here, MSTR way outperforming, and they don't have any leverage on Bitcoin. All right. So watch out for the air to get sucked back down out of this. Even if Bitcoin was rising, we could see the air sucked back down out of MSTR. It definitely got a little overextended here. We can see an outsized return. All right. Maybe maybe they're further back. They were more aligned. And really, even if we go all the way back to the lows of Bitcoin in November, we're still way outperforming on MSTR. We were up like 1,100%, whereas Bitcoin just topped out at 300%. All right. So be careful on things that get a little overhyped. We definitely tapped right up at that 1618. And then we get the retrace right back to the roadmap line where we would be where I would expect us to go. SMCI. Oh, I have lots of pollen allergies. Oak tree pollen. Anyway, SMCI right here looking like we may drop right down to the roadmap line. If we don't hold it, guess what? Right back down to this prior consolidation where we hung out for, gosh, what was it? June, July, August, September, October, November, December, January. So that's like a 6-month consolidation right there. Entirely possible we give all that back up right back down to that consolidation. This looks like the bubble pattern right here. If you've never seen the bubble pattern, look right here. Yeah, ramp up, consolidation, and the flush right back down. Consolidating here, consolidating back down. Be careful. That's the psychology of a market right there. You can Google that if you want to. That's a very, very, very common pattern. We see it in the markets all over the place on things that get a little crazy. You see it right there. May flush right back down. It's not necessarily a time frame thing. Like this can keep drifting right back down till we get here. GME, what the heck is going on? Speaking of crazy, look at this. Look at this thing. Oh, goodness gracious. It triggered I had a $20 alert on Friday. I was like, maybe I should buy some. But then I was like, nah, that's playing with fire. I mean, this is the ultimate fire right here. How far can we ramp this time? I don't know. There's a pretty major resistance right up here. Probably going to hit it up there around 50. And watch out. If we do some crazy ramp, buying as much time as you can for it to retrace can make you some money. Can. But the options market usually prices you out of the making money. And they're pretty good at that. Squarespace, getting a little pop, but that's just a grind higher is what that looks like. Just grinding it out. And that high, that low. We're coming up on a resistance at 38. Even though we're up here at 43. Be careful. I could drop back down very quickly. We have this bigger resistance sitting right there, right above where we are, where we topped out on the way down. See, we kind of got this knee jerk, popped up, resistance. There were people buying here, and they're going to be bag holders. There'll be some supply show up on that spike, and when we get into that spike right there. So right there around 48. So hanging at 43 here. Be careful. Be careful. I mean, I guess they didn't lose as much money as people thought they might, but, you know, that's still missing on the top, barely beating on the bottom. But it's good, I guess. Coin. Come on, coin. I just want you to retrace just down to the roadmap line. One nice flush right down there. I will look for a position if we get down there. I'd love to see that flush right there. Arm. Another one that's went a little hypey and is on the slow grind back down. Eventually, it's probably going to come back down. You can rally all the way back up here again, but be very careful. It's probably going to... Here, this resistance right now, sitting right here. That's the upside resistance. Right around 133. Can you make money on it? Sure. I mean, you could. You know, that's $20 up. You know, does it have to go up? No, it can just keep grinding right down to where we consolidated down here in December, in January and February. INCY popping up, finding resistance. Be careful. Last time it got up here, it turned down, made a lower low. Didn't quite extend down to targets. We could very easily see it go lower again. Right after there. 48 support on the downside. Of course, we've got once bottom, twice bottom. We could bottom one more time. Baba trying really dang hard to break out of this. Like we did the little back test, like this was what I was talking about earlier, where we back test and get going. See how we back tested right there and going. If we can break above these prior highs, good indication we're going to get some continuation, possibly much higher. We could be looking at levels all the way up here, 150 to 200 on Baba. Alibaba. NVO. Nora Novardisk, maker of the GLP-1, maker of some GLP-1 drugs. Hanging in the middle here. This is it, kind of riding this big channel. And my channel keeps getting distorted. Put it on the lows, put it on the highs. So we tried to go for a breakout of the channel here, and it's not a very great channel. I mean, it's not the best channel, but it is kind of coming down, riding up. Oh, try to break out back in here. Watch out, we can go dropping right back down to the bottom of the channel. But in general, this thing's going to keep on moving higher. That's support, that's resistance, and just chugging in the channel to be what I expected. This did split back here, so prices used to be a little crazier. Take two. That's a bearish resistance right there. Even though we were popping pre-market, looks like we're giving it all back. BitX, of course, however Bitcoin goes, we did see a pop about 6%. That's pretty good. We found a support right here. If we can break above this downtrend and this 618 level, game on for much higher levels, 67, 77. And if Bitcoin goes up in the 100, 200, 300,000 zone, this one's going to go much higher at 2x leverage here. I'm playing this one mostly with shares, not with options. Be careful. Leverage cuts both ways. Leverage highly dangerous in the market. Apple showing a nice little pop here. If we can break above this 618 level, the 618 resistance, game on for going higher. 208 upside target. If we reject, back to the roadmap line and possibly a deeper retrace right there for support at the 618. If we get below that, extensions on down here, possibly 158. That's the long and the short of Apple right there. Yeah, GME. I mean, I still have GME shares from before the last big play. I watch so many people lose money on GME. It's not necessarily like I'm opposed to playing it. I just think people need to be careful. All right. I watched a lot of people lose money in GME, AMC, a lot of the other hype stuff, and it's dangerous. I'm just telling you, like, unless you sit here and you can watch the charts and you know what you're doing, you got to be careful. Pinduoduo potentially breaking out, upside targets 157, 169, and I saw I lost my thought. This is the parent company of Temu, I do believe. And they don't even claim it at all, but I'm pretty sure this is they hold Temu. Is, Pinduoduo Holdings is Temu. And so you got like AliExpress is Alibaba, like if you've been on buy from China stuff, AliExpress versus Temu, and a lot of the same Chinese crap. And I see so many advertisements for Temu, and you notice, Pinduoduo hanging up here, it's doing pretty well, whereas Baba hanging out down here, trying to break out, but way down from where it used to be. We'll see what happens there. ARKB. That's ARK's Bitcoin spot ETF, up to $2.7 billion under management. iBit, funny enough, didn't make the list this morning, but they're up to $17 billion under management for BlackRock. Seems to be the big winner. And FBTC. This is Fidelity, coming in at $9 billion assets under management. So Fidelity and BlackRock definitely kind of putting the hurt on ARKB as far as assets under management for their spot ETFs. LABU, so far holding resistance. This is leverage on biotech. That's like two different things that I say are highly dangerous. Biotech, highly dangerous, and leverage, highly dangerous. And this is a 3x leverage. Can cut both ways. All right, be careful. And it's below resistance. Watch out for the flush. KB. That looks like it's ramped up, ready to go to 61, possibly 66 on the upside. Carvana popping, just consolidating in this pop, and we may do the retrace back down to support. That's indicative of kind of topping action. There's more red candles up there than there are green. Some sellers, there's some supply hitting the market, and we may see a flush back down once the buyers are exhausted up there. Dell going at it. Can we get the extension? That would be the question. Can we get the extension? 142, 150 on the upside, showing strength. While what's funny is you look at SMCI right here. They went crazy higher, right? Dell, a bigger supplier of the same kind of equipment, they didn't do a crazy big multi-1,000% up. And we compare them here. Look at this. Look at SMCI compared to Dell. Even if we zoom it up just to like this year, look at this. SMCI did that. Dell, a bigger purchaser of NVIDIA GPUs, a bigger supplier of servers. There's still some discrepancy here. These two are probably going to come back together. Why am I bearish on SMCI? Because it went a little too far too fast. All right. It's kind of like that, kind of like MSTR and Bitcoin. No good reason for that to have gone as crazy as it went. Be careful. That's I like to point out these things and tell you to be careful. All right. I'm serious. Like, now, Dell probably has the opportunity to catch up, while SMCI probably has the opportunity to retrace deeper. BITU, that's another ultra leveraged Bitcoin, and just like BitX, be careful. This one has less history, no roadmap line, no nothing on here, but another leverage way to play Bitcoin. Google getting on the biggest decliners list. Nice drop. And we may retrace that back to the roadmap line like we did back here just in March, just a couple months ago. FTRE. Ooh, look at that one. When they break below the roadmap line, it's a cautionary tale. That low, that high. If we hold support here, we can go higher. But if we get a daily close below at 76, odds are we're coming on down to this zone right here. Gonna go visit this at the minimum, if not get an extension on down to like 14, 15 area. GEV. GE broke apart in lots of different little companies. This one doesn't have any price history here. I mean, it has this many bars, but that's not enough bars to do any of my charting analysis. So just grind higher at this point. It's not an IPO, but since it's a split off, but could potentially grind higher. SRG. Ooh. Well, that one took a turn for the worse and may go lower low than what we had back here. Choppy sideways. Be careful. And that's a real estate investment trust too. Usually you don't see that kind of. Usually you don't see giant moves on real estate investment trusts unless something's up. I would definitely be super careful. Google leverage long. That's leverage on Google. Cuts both ways. You can drop back very quickly to the roadmap line, if not lower. And there's Kimberly, my favorite subscriber. Dutch Bros. Looks like we're going to pop to 38. 42 on the upside would be the targets. That's the pattern right there. Let's check out the statistics. 100% of the time, it's done it one time before. So there's only one. It's not like a statistical population of 30 or so. This is just a one time it happened before. We did the roadmap line bounce. It was just right back here. You can see it right there. If we do it again and target up there at 38. Brilliant.org. All right. Have a great day, everybody. We're going to go over here and give you the bias for the day before we wrap it up. And then we'll be on to other things today. I'll be in Discord if you want to join Discord. Link is in the description. You click the more button. Give me a like if I said anything that was beneficial, helpful, anything like that. My bias for the day is extreme caution here. If we reject, like this is it. If we reject, watch out for the flush. We do have the odds. Odds are tilted. We're going higher on S&P. Odds are tilted. We're possibly going higher on NASDAQ. But on the Russell, odds are kind of against us. We're going higher right now. Very, very cautious here. Very, very cautious. So be careful out there. All right. See you later.